This is exercise 6.4 in your text on Connect. This is called problem 1. And they give us some information about this company, Southwest Milling. And as we've seen so many times, we need to go through and figure out just what we have to consider and what is just kind of BS. Well, they purchased a front end loader, so purchased. We're going to look to see cash or accounts payable. To move stacks of lumber, yeah, wonderful. The loader had a list price of $140,000. Pretty sure we're going to need that. The seller agreed to a 4% discount. We're going to need that because they paid cash. Okay, so now we know that the purchase was for cash. So we're not going to have a payable. Delivery terms were FOB shipping point. So that means once it's shipped, it's ours, so we get to pay for the shipping. The freight cost amounted to $1,200. We're going to need that. They had to hire a specialist to calibrate the loader. I've driven front end loaders. I don't know how you calibrate them, but we'll make pretend it's true. So if we had to hire a specialist to get the thing up to running order, we're going to include that. The operator is paid an annual salary of $60,000, and the theft insurance increased by $800 because of the loader, and it had a 4-year useful life and an expected salvage value of $6,000. Well, if they ask us about depreciation, that'll be handy, but I'm not sure that they do. Let's see what they want us to do. They want us to figure out the amount to be capitalized. And remember, capitalized is a code word for put on the balance sheet. So, let's go through and pick out what we need. And I'll circle those in green. I'll eventually run out of colors. Let's see what we need. Okay, so we're going to need $140,000. So we're going to need that. So let's write that in. The list price, $140,000. They told us that we paid cash, so we got a 4% discount. So 0.04 times 140,000 is $5,600. So that's a reduction. And here I would use minus signs just to make sure I don't do anything stupid. Although it often takes more than a minus sign to keep me from doing something stupid. So we handled that piece. We got that piece. We got that piece. Freight cost amounted to $1,200, and it was FOB shipping point, so that's ours. So we need to add that piece. So that's $1,200. Because remember, all normal, reasonable, ordinary costs to put the asset to its intended use. And let's see, so we got that piece. Now, we had to hire that specialist, and we had to hire him. They tell us that, had to hire. If they said, felt like hiring, not so much. Had to hire. He was necessary, or she was necessary, to put the item to its intended use. So that $1,800 gets added. Are there any other things we need to worry about? The loader operator is paid $60,000 a year. Well, that's a period expense. That's a regular, ordinary income statement expense, because the dude's going to get 60 grand whether he drives that loader or drives a different one, so that doesn't really count. And the insurance policy went up by $800. That's related to the loader, but that's an annual charge, so that doesn't get added, because remember, the only things you add are the one-time upfront costs that are necessary to put the asset to its normal intended use. So the operator's salary and insurance, their expense, their operating expenses. So there are no others. So when we add that together, the total cost, the capitalizable cost, the amount that we put on the balance sheet is $137,400. That's the total capitalized cost. All of these are the normal, ordinary expenses necessary to put the asset to its intended use.